Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. What I would like to do today is share with you guys 5 quality businesses that have increased their dividend 9% or more in the last 5 years. Each one of these companies has a wide economic moat. That means they basically have a competitive advantage over their competitors and so on. But before we do that, I would like to wish you all Ramadan Kareem. May Allah accept our deeds, may Allah accept our prayers, our fast, our du'as and everything else. May Allah protect us, inshaAllah. And please make dua for me and for my family, and I will do inshaAllah the same for all in the entire community, inshaAllah. And moving forward, inshaAllah, I will continue releasing videos, but I'm going to try to make it 10 minutes maximum, because of course we want to spend a lot more time, inshaAllah, reading the Quran, making dua, and basically doing a lot more ibadah rather than just watching videos about that 15-20 minutes. So I'm gonna try to reduce all the videos into about 10 minutes, inshallah, so you can it's small enough to watch but not a lot, basically not time consuming, inshallah. So that's the plan. So what I would like to do right now is talk about these 5 companies that have increased their dividend of basically last 5 years. They've increased more than 9%, some of them 9%, some of them are slightly more. And all of these companies have a wide economic moat, and they actually, in terms of 2 of them are slightly overvalued, the rest of them are fairly valued. So it's interesting to, inshallah, have a look at these companies. But before we do that, I just want to have a quick look and show you guys the S&P 500. And as you can see here, okay, today it doesn't actually look that bad. So a lot of the companies that normally been going up quite a lot are now down today. But some of the other companies are doing okay. But when you look at for the 1 week, okay, things slightly get different. Okay, so you could see there's a bit more red in the market, especially the semiconductor software companies and so on. Eli Lilly, for example, is down about 7%. So hopefully we'll continue basically coming down a bit, because the valuation right now it seems very, very expensive. So hopefully we'll get an opportunity. Now, before we move on and look at these 5 companies, please join us on the Discord if you can, because it genuinely helps the channel, as well as just if you can't do anything else, just like the video. That's all I ask, inshallah. Right, let's have a look at these companies. So as usual, we're going to look at the same information that we always look for. And the first company that we're looking at today is Waste Connections. This is one of the companies. This is very similar to Waste Management. So they collect a lot of the garbage and of course recycle it and do all of that business. Right now, they have a 43 billion market cap. They will have wide economic moat. Price right now is $167 per share. Dividend yield of 0.68, which is quite low if you think about it. Payout ratio is only 25%, which is nice. So that means they can increase it. Latest increase was 12%, and the 5-year growth rate of 13%. And this is the column that we focus on, as well as this, of course. Okay, so 13% in the last 5 years. To me, this is important. Why? Because if you look at my portfolio, I don't have a lot of high yielding companies, but I do have a lot of dividend growers. And the reason for that is in the next 10 years, these companies will continue to do that, because they have been doing that for quite some time. As well as if they have a low payout ratio, then for example 25%, that means 25% of their net income is basically used as a dividends. So if this was about 70-80%, then I would be worried, because that means a lot of the money that the company generates is going back to the dividends, which is not great, because how are they going to grow the business and so on, right? So it's really important to focus on the 5-year growth rate for me as an investor, as a dividend investor who actually needs at some point in my life, inshallah, I will be relying on that income. So for that reason, I like this. I like to see this. Okay, so the dividend streak of 13 years, so they have increased that dividend for 13 years in a row. $1.14 is what you will get for every share of this company that you own. 80% safety, again, wonderful to see that. Profit margin 9.5%. Return on equity, we're looking at about 10%. On return on invested capital, about 9%. They have $1 billion, over $1 billion of free cash flow right now. Total return in the last 10 years about 19%. This gives us an idea where the company has been, and this gives us an idea of where the company is going to be in the next year or next 5 years. So 14% and 15%, and then 23% in premium right now. $136 per share is where they think the price should be. So it really needs to come down about at least £30 or more moving forward. Just to show you quickly the expectations for this company in terms of growth side of it, you can see an EPS, they're expecting double digits, and in terms of the revenue side of it, they almost did double digits for next year, then about 7% also after that. Next company we're looking at right now is Sherwood-Williams. This is one of the companies that have been on my watch list for a long time, but I never seem to actually buy it because see, look at that, it's like really expensive. However, its dividend side of things is really good company, very similar to PBG, which I used to own back in the days. $86 billion market cap right now, wide economic growth, $339 per share right now. Dividend yield 0.8, again payout ratio 23%, latest increase was 18%, 5-year growth rate 16%, and 45 years of increase in that dividend. So they are dividend aristocrat, meaning the company is in the S&P 500. They've increased that dividend for 25 years plus. 5 more years, this company will become a dividend king if they continue increasing it. Annual payout right now we're looking about $2.86, safety 87%, profit margin 12%, return on equity 29%, and return on invested capital of 22%. $2.6 billion free cash flow, 18% total return in the last 10 years. Growth estimate next year and the next 5 years is 11%, almost a 60% almost a premium right now. $214 per share is where they think the price should be. And in terms of growth side of it, in terms of earnings expectations, we're looking about double digits for EPS, and then single low one digits, for example, for single digits for in terms of revenue side of it. So nothing too huge, but it is one of those steady eddy companies, but it's really expensive right now. Masco Corporation is another company that we have not actually spoken about in this portfolio, in this channel at all. And this company deals with a lot of construction side of things, building side of things. $16.9 billion right now, wide economic mode, $75 per share right now, 1.5% dividend yield, payout ratio 29%, latest increase was 1.8, for the 5-year growth rate of 21%, dividend streak of 10 years. Okay, annual payout $1.16, 63% safety right now, so it is safe. 61 and above is safe. Profit margin 11%, return on equity is non-existent at the moment. Okay, return on invested capital 40%. I'm not sure why that is not displaying, but $1.1 billion of free cash flow right now. Total return in the last 10 years, we're looking about 14%. Next year, they're expecting the earnings to grow 11%, and then the 9% after that. Fairly valued right now, $78 per share is where they think the price should be. Right now, as you can see, is $75 per share. Now looking at the company in terms of earnings expectations, you can see single digits, double digits for the following years, and then similar sort of 5%, 4% in terms of revenue side of it. 2027 they're expecting double digits, which is quite interesting because there's only one person looking at that. So if you just focus first 3, you can see 4%, and then it'll basically 1% almost there. Right, next company we're looking at is Automatic Data Processing. This is one of the companies that I own in my portfolio. Right now it has a $99.6 billion of market cap, wide economic mode, $244 per share, dividend yield of 2.3, which is quite nice, payout ratio of 60%, so it's quite high in my opinion. Latest increase 12%, 14% increase in the last 10 years, last 5 years. Dividend streak of 49 years, so one more year this company will become a dividend king. The annual payout right now is $5.60, 97% sorry of safety wise, profit margin 19%, return on equity 97%, and then return on invested capital 61%, which is absolutely huge. In terms of free cash flow, we're looking at $3.3 billion of free cash flow. Total return in the last 10 years 14%, 10% in terms of growth estimate for next year. Then the same thing for the next 5 years, 11%. Fairly value right now, $240 per share is where the price is at. And looking at seeking alpha, 10% almost every single year for the EPS side of things, and then 6-7% in terms of revenue side of things. And finally, the company that we're looking at today is AbbVie. AbbVie is a pharma company, one of the biggest out there, $316 billion market cap, wide economic mode, price is $179 per share, dividend yield of 3.47, which is really huge. I'm thinking of adding this one to the portfolio. I'll let you know, inshallah. 54% in terms of the payout ratio right now. Latest increase 4.7. Growth estimate for the 5-year growth rate, sorry, of 9%. Okay, so that just meets the cutoff. Dividend streak of 52 years in a row. So they are dividend king. $6.20 is what you will get. And safety 80%, profit margin 8.9, almost to 8, basically 9%. Return on equity 35%. Return on invested capital of 24%. $22 billion of free cash flow right now, which is absolutely huge. They could do a lot with that. And total return in the last 10 years 16%. Growth estimate next year is 9%, then 3% after that. Fairly valued right now, $168 per share is where they think the price should be. You can pause the video and have a look at that, but that's the companies that I want to share with you guys. Straight compliance side of it, pause the video, have a look at it. No issues whatsoever when it comes to this. That's the 5 companies I wanted to share with you guys. Again, please make sure you do your own research, find out a bit more information about the company. If you like this, please subscribe to the channel. Let me know if you have any questions. Have a wonderful day. Ramadan Kareem again. Assalamu Alaikum.